Good morning, guys, and welcome to the show. I'm glad to have you guys here. Today is the 17th of January. It's a Thursday, 2019. Listen, China is the only country on earth that's still actually doing economic stimulus. And they're not doing it small time, they're doing it big time. But they got a huge debt pile, too, just like all the other central banks. All the other central banks are cutting back at the same time, and this is what's causing this deep kind of a little bit of a depressed conditions in the stock market and everything else. But the United States is probably the worst one of all. They've went into actually removing liquidity from the system through quantitative tightening, and also they're doing their raising interest rates at the same time. So they're actually removing money. Now, Europe has just basically stopped their stimulus, and they're not removing money. They're not removing euros. Now, all the central banks are doing this, except for China. China's just injected liquidity. Let's turn the charts on right here and take a look. It says right here that these are the articles. It says China. Why has China just injected 83 billion US dollars into its economy? China signals more stimulus as the economic slowdown deepens. Why China's latest stimulus efforts are simultaneously calming the markets. China won't unleash runaway stimulus to revive the economy. They are. They're already doing that. I'm going to go there to CNN just for a second. And CNN is already wrong on this, wrong from the very start. It says China won't unleash runaway stimulus to revive the economy. Well, they just did. They say they won't. They just did. This is runaway stimulus. Right now. Right now. It's happening right now. They've already done it. They're doing it. It says China's economic slowdown is causing alarm around the world, but President Xi Jinping's government may be willing to go only so far to limit the damage. Beijing on Tuesday announced 1.3 trillion yuan, that's 193 billion worth of new measures designed to stimulate the economy. That's runaway stimulus. So the Chinese economy is going to feel the effect of this 193 billion US dollars. So for a little while, things are going to be okay. But you know, if China starts to cut back too, along with all these other central banks, this is not going to last very long. China's a huge country. This $193 billion is not going to last forever, you know, and it's going to be gone. They're going to work through it in a few months, and they're going to be right back around where they started, except with a bigger debt pile. And that's what was happening with us. And that's what's been keeping the economy actually afloat for the last 10 years or so, is economic stimulus. Now, all these central banks are withdrawing their stimulus. China's the only one that's trying to prop up the world economy, all by themselves. But they're undergoing a slowdown right now. It's a mess, folks. Let's go to the silver price and take a look and see what's going on today. We had this huge dip in the price, and the price has been falling all morning. We've lost 12 cents in the morning so far. It's $15.46 right now, and it's actually broken through, and it's out of its range. You can see this range was in around $15.50 now for the last week or so, and it's broken through that range to the downside. Now, I tend to think that this won't continue very long. Are the bankers at it again? Are they increasing the amount of paper short contracts? I don't know, but we're going to have to wait and see what happens with this. Let's take a look at gold today. Okay, here's the gold chart, down $3.30. So gold's not down quite as bad as silver because, look, gold has not broken through its range yet. The lower end of the range here. It hasn't. It's in the middle of its range right now. It's come down from the high end of its range down to the middle end of its range. So it hasn't broken through. $12.89 is the price for gold right now. $12.89.90. Okay, so now let's take a look at cryptocurrency markets. Let's take a look at the cryptocurrency market capitalizations. Bitcoin is at 52.4%. $121 billion worth of market capital. And we see a lot of red in the coins today, but not big. It's not big. It's only a small amount. Bitcoin and the cryptocurrencies haven't been doing much the last few days. Not a lot to report on here. If we go over to Bitcoin Wisdom, we're looking at $3,594. So staying in right around that $3,600 range. It's almost like I'm not going to say it quite yet that the cryptocurrency market's found the floor. I'm not going to say that quite yet, but it's starting to look that way. More and more as the days pass, it's starting to look like she's found the floor. Okay, so let's go on now and take a look at the Dow Jones Industrial Average this morning. And she's starting to turn over a little bit, just a little bit. 25 points down, 25.63 points down. The Dow Jones is at 24,181. That's where it's at. It's down just a tad, but I expect more movement downwards. Yesterday I was telling you guys I expected a downwards movement in the Dow. And I'm still expecting this downwards movement, a downwards trend today. Let's take a look at oil. 51.46. It's down 1.62%, down 85 cents on the day. And I remember I was telling you yesterday that I was expecting a little bit of a continuation in the downtrend on oil. Because if we take a look at a little bit longer, if we go to like a 6-month chart here, and what we can see is this was a peak right here, $76.20. And if we draw a line between that and the peak where it is right today, we can see the downwards trend. And this little bounce we had right here, I don't think that's going to matter a whole lot on this downwards trend. I don't think we've completed this downwards trend. We will, though. I'm going to tell you, give it a couple years. Looking out into the future, a couple years from now, you're not going to believe how high the oil price is. Probably say 3 years. Looking into the future, 3 years. Because, there's not unlimited oil on the earth. A lot of people like to think there is. And there is a lot of oil. But they've picked all the low-hanging fruit. The easy oil to get first. You remember in the old days when they used to go out and drill a well for oil, they drilled down just a little ways and all of a sudden the oil comes spurting up into the air. It'd shoot up into the air 1,000 feet in the air and spray everybody. And they'd all be dancing because they just hit oil. That's how it used to be. That's how the wells used to be. Now they go and they untap one of those old wells that used to be spurting up in the air and they hear a hissing sound. And they hit nothing but dry down in there. So what do? They come along and they put pressured steam and chemicals down in there. It's called fracking. And they're able to actually leach the oil off of the rocks, the leftovers oil that's off of the rocks. And they're able to actually pump it for another year or two. A well that was dry, a well that used to spurt up into the air when they first found the well. Okay, so there's all kinds of wells like that in Texas and places like that. And here's the thing. It's when they're done fracking, when they get to the point where even when they frack it, there's nothing left but a dry hiss, down there in the well. Then that well is done. They've even cleaned the rocks bare. I mean, this is where we're headed. And you're going to find that this fracking doesn't have the staying power. After a while, all these fracked wells are going to start going dry all of a sudden. So American oil is going to start to go into decline. And then the Arabs will have us by the, what? Once they get us where they want us, you watch what happens with the oil price then. Because the Arabs, they got a little bit more oil than we do. Their pool, they started sinking into an enormous pool of oil, the biggest pool of oil on earth, and they still got quite a little bit down there. But they're getting they've sucked an awful lot of their oil out too. Honest to God. Let's move on. Bonds and rates today. We're looking at the bond yields climbing, all in the middle end of the curve. The short and the long end of the curve are falling. So it's kind of a little bit of a weird day, But the bonds are not moving that much. The 5-year and the 2-year are moving the most. They've moved 1 basis point, basically. So that's what's going on with the bond market. Not an awful lot of movement in the bond market today. Let's take a look at U.S. dollar index. 96.14. It's starting to go up right now, the dollar. The dollar's staying fairly stable, you know. I mean, a month ago I was reporting on it. It was 97. Now it's 96.14. That's because they're doing everything that they can do to support the dollar. Deflation supports the dollar. And so they're moving it as close to deflation they can without it actually. It's a balancing act. They're trying to. It's almost like taking a barrel and pushing it up to the edge of a cliff and trying to see how close you can get that barrel to the edge of the cliff without losing control over it and having it fall down the cliff. You know. Honest to God. They're supporting the dollar by supporting deflation. And if inflation runs away on them, can you say goodbye dollar? That's what will happen. People will lose confidence in the purchasing power of the dollar. It's going to happen, by the way. They can't really stop it from happening because there's so many pressures on the system. As these pressures, these leverage pressures intensify. See, they're over-leveraging the system. They're creating too much credit, but credit is actually the same thing as debt. And the system is actually over-leveraged. When the system becomes over-leveraged, it becomes unstable. And we're seeing that in the stock market. Listen, thank you guys for listening. I'm going to go answer that phone. Bye-bye, guys. You have a nice day.